It's time for the Property Podcast, where every week tens of thousands of property investors, new and experienced, join together to get news, knowledge and laughs at our expense. With me, Rob Bence.
And me, Rob Dix. Join us every Thursday morning for your weekly dose of property ideas and motivation. Then head over to our website at thepropertypodcast.com to keep the conversation going. Now though, let's get started.
Hello everybody and welcome to the Property Podcast. I'm Rob B. With me is Rob D. We're here with the big property survey. This episode is a long time in the making.
Yep, it is. We're very excited about this. We've had a few people who saying, hey, you asked us all these questions a few months ago. What are you doing with it? Well, the answer is we've been getting a professional to take a look at it and pull out some really interesting conclusions. And so during this episode, we're going to run through all of those, as well as all the usual goodies that you've come to expect from the Property Podcast.
This episode is based around this big survey that we've done. And as Rob said, we surveyed lots of you a little while back, and we have put all this data together. But even better, we've put an infographic with some of the most interesting points together as well. If you go to the show notes, which is thepropertyhub.net/survey, you can see this infographic. And if you've got your own website, we'd love you to share it. Please feel free to embed it into your own website if you think your readership will find it useful. And if you haven't got your website, if you'd like to help get the message out, then if you tweet it or put it through Facebook, we'd love to spread it out so people can find out more about property investors. The infographic's really cool. I hope you like it when you have a look at it. So it's thepropertyhub.net/survey. And please spread it out across your networks. We'd be very grateful.
Yeah, we would. Okay, Rob, before we get into the survey, though, can I do a little plug? Is that okay?
You can, Rob. It's been a long time.
It has. This one is not property related, but it still might be of interest to our listeners because it's kind of related to some of the resources of the week that we've sometimes had. So basically, I've written another book, obviously. Well, I should say that my wife and I have written another book, and it's not about property for once. This one is called Protect Your Tech, and it's about staying safe online, which might sound kind of boring, but it's actually really important, and we've tried to make it fun. Because when you've got all your data in the cloud, like we've talked about using Dropbox and Evernote and things like that, and when you're using the internet on your phone when you're out and about, when you're working from hotels or cafes like we do sometimes, these are all opportunities for people to hack in and steal your data. And you're probably not even aware of all the risks that there are. But it's when you think about all the information that you've got out there that you realize how damaging it would be if someone else got their hands on it. So the idea with this book is it's a really quick read. It's pretty fun. And it just shows you some things that you can do to protect yourself. There are lots of things in there that we've had as resources of the week before and lots that we haven't. If this sounds really boring to you, that's absolutely fine. But if it sounds interesting to you, then in a couple of weeks' time, it's going to be free for a week. And so I'll tell you again on the podcast when it's going to be free so you can pick it up then. But if you want to help me out, pick it up now and leave us an early review. And you know, we've said before how helpful those early reviews are. We would love it if you could do so. The Kindle version is only 75p at the moment. If you're willing to spend 75p, you can go onto Amazon and you can either search for Protect Your Tech, or you can go to the show notes for this episode and there'll be a link over there as well, which are at thepropertyhub.net/survey. So it's not going to be for everyone, but if it does sound like it might be up your street, you don't have to be techie at all. It's written for the average person on the street. I would really appreciate your support.
And I've been a good boy, Rob. I've bought it and reviewed it. And I've already started to read it, and I'm very impressed and worried about, about how lax I've been. Its value is worth way, way more than the 70-odd pence. However, if you don't want to pay, as Rob's been very generous, I'm going to give it away free in a few weeks. So very good of you, Rob. Now, if internet tech and your lack of knowledge around it scares you, wait until you've heard our news story of the week. Oh, it's not good, but we'll go with it. In fact, the news story's not good either. It's been a bit of a slow week, but as this goes out the day before Halloween, we've done a haunted house story. This is actually not just a house, but a ghost town. And you can buy your own ghost town in America for $800,000. So what's that, about £600,000?
It's £497,000. It says it in the article. I didn't just work that out.
Oh, I was going to go, wow. You're really up on your Forex. Rob's new podcast, the Forex podcast. It's probably not going to change your world, this article, but if you want to have a look at this weird-looking town that's apparently very haunted, and I'm sure it hasn't just been called that for PR purposes, then you can read this article, have a look, and if you're feeling a bit flush and you want to treat someone on Halloween, why not buy them a ghost town?
Yeah, 62 acres of ghost town. That's for the price of a one-bedroom London flat, probably. I don't know. It has been a very slow news week. We spent ages looking for something more relevant than this, but hey, it's Halloween. You've got to have some kind of tenuous link in there. Okay, well, let's move swiftly on then to our topic of the week, which is the Big Property Investor Survey. We love hearing from Property Hub members. We love reading everyone's stories, and it's absolutely fascinating seeing the individual stories that are behind the reasons why people invest in property, why they do it, how they do it, and so on. But if you compile everyone's views and experiences, what kind of patterns emerge from that? What can we tell about property investors as a whole? Well, that is exactly what we've done. A while back, we surveyed 162 members of the Property Hub who were kind enough to respond to our little survey. And we got in a professional to analyse the data for us and pulled out some really fascinating information. So we're going to run through that right now.
So the first section is becoming an investor. Now, the average age an investor in our survey bought their first property investment was 33. And from the experience I have with dealing with investors every day and helping them build their portfolios, that number sounds about right to me. Almost 50% of the respondents bought their first property between the ages of 26 and 35. But some started younger. A surprisingly high 20% were under 25. Maybe that's just because the people in the Property Hub are really on it, but that is a really high number. While it's never too late to get started, only 1% of the people who responded bought their first property when they were older than 55. That's investment properties.
Yeah, that is investment property. But I was amazed by that number of 20% of people who are under 25. And I think it does show what a proactive bunch we've got. The general UK average, I'm sure, is going to be older, but still well done to everyone who did that. But however young the average investment age is, a lot of people wish that they'd started younger. We had another question where we gave people the choice to name any piece of advice that they wish they'd received before starting. They could have answered anything at all, and 33% of people said that they wished they'd been encouraged to start younger. So even though people are getting started in their 20s and 30s, they wish they'd started younger, and they know about the benefits that you get, the compounding benefits that you get over time from capital growth and so on and so on. In this same question, some people said that the piece of advice they wished to receive was they wish they'd been told never to start at all. But happily, only 3.7% of people said that. So that's not so bad.
No, it's not so bad at all. And that actually links back to an episode we did, The Biggest Regret in Property Investment. It's good that it backs that up because the biggest regret was that people wished they'd started sooner. So I'm not surprised that number's so high. So what's the average number of properties owned by the people in the survey? Well, other surveys have found that a vast majority of the landlords in the UK only have one property. But the Property Hub audience is a more active group. The average in our survey owned 4.78 properties exactly. But while we are definitely above the average, we're not moguls either. 96% of the respondents had fewer than 10 properties, and nearly 30% had one.
Yeah, so 4.78 is the average. Maybe the 0.78 is a tiny studio flat or something. I don't know. So that's the average, and nearly 30% had just the one. But that one, by the way, is again an investment property that doesn't count people's own homes. In fact, not investors own their own home. So there's been a few active Property Hub threads about whether you actually own or rent your own home. So because of that, we thought that we'd ask the question in the survey. And what we found is that 20% of investors rent the home that they personally live in. As a podcast listener, you're probably not overly surprised by that because you've probably heard us talking about this before. And in the show notes, we'll link to a really great thread in the Property Hub where people talk about the benefits and the drawbacks of renting your own home and investing elsewhere. But I think to a general audience, they think 20% is really high. It's like, surely you buy your own house first, you get your dream home, and then if you've got money left over, you go on and invest. But as we know, that's not the only way of doing it. And yeah, it seems 20% of people just put all their cash into their portfolio.
Yeah, that's right. And we are prime examples of that. There's plenty of reasons behind it, and it's well documented in the thread and the Property Hub, which we'll link to in the show notes. So the maths there, if you live in an area where property is expensive, the numbers are more efficient for you to rent. So Rob and I rent. People in the forum who are quite prolific posters like Nick Stott and Damien Fogg, they both say they rent in that thread too. So you'd be surprised, actually, some of the more experienced people in the Property Hub are renting, and I think that's because it's just a pure numbers decision for them. Now, with your own home, there's always emotion. And I'm not saying me personally, I'm always going to rent as well. One of the reasons I like it is, as somebody who's moved from the north to the south, is that I don't know the areas that well. So I've moved a few times while I'm trying to find the perfect area for me to really put down my roots. So renting has offered me that flexibility while also being a better financial decision as well in terms of what it would cost me to rent versus buying. So it's an interesting thread. You may be listening to this, especially if you're new to property, going, oh, are you mad? Have a look. The numbers are there. It's not just opinion. Okay. So where are the most common investment locations? The most popular areas for investments in our survey were London, the northwest of England, and Yorkshire. And this makes sense as it encompasses big cities like Liverpool, Manchester, Leeds, Sheffield, of course, London, we said it. We did notice, though, that those who only owned one property were disproportionately likely to invest in London. Perhaps that prices are so high that it takes longer to build a portfolio.
Yeah, exactly. And so the next question then was, well, these are the most popular investment locations, but do our investors in the survey actually live there, or have they chosen to invest there, but they actually live further away? This is another topic that we've covered a fair bit. We've made clear that our personal view is that as long as you do your research, you don't need to have your investment properties on your doorstep. Other people disagree, and they think that it's far better to have the control of investing near where you live. So we gave a whole episode over to that, which we'll link to in the show notes. So what does the survey say? Do most investors prefer to live near where they invest or not? Well, the decisive answer is not really decisive at all. 55% of investors in the survey said that the majority of their portfolio was in a half-hour drive of their home. So that's pretty much a 50-50 split, I think it's fair to say. So it seems like the debate about whether you should invest near where you live is just going to rage on. There's no clear answer to that. But again, we did notice that for those investors who only have one investment property, 70% of them lived within half an hour of it. So that could suggest, although we're just guessing now, that investors tend to start out locally where they're more comfortable and it's easier to do the research, and then branch out from there as they become more confident. So it seems for this one that there's no clear right or wrong. People are doing it both ways and they're all perfectly happy.
And that's the main thing, Rob. You've got to be happy with your strategy. You shouldn't do something that makes you feel uncomfortable. So although Rob and I are more than happy to invest further afield and buy property without even seeing it, some people that would absolutely terrify them. So it's not, you should do what we do. You should do what's right for you. But there are merits in it. And as Rob mentioned, it's all about research. If you put the effort into the research, then you can take advantage of deals elsewhere. So, as investors, what do we invest in? It's no surprise that normal residential single-lets are the most popular type of investment, with 90% of investors having at least one of these in their portfolio. 21% had at least one HMO, which I thought was quite high, and 13% have at least one commercial property. And as I've personally have never had any real dealings with commercial property, I'm surprised that we got so many people in the hub that deal in commercial. It was also to be expected that most investors target the professional market, with 94% having at least one property let to professionals. Nearly 30% of investors had property let to tenants on benefits, and 20% had at least one student property. So some interesting data there.
Yeah, and there's also some interesting things if you break down the data a bit. So let's take a look at the LHA market. We've said that 30% of investors overall have at least one property let to tenants on benefits, which is probably about what I expected, actually. But then it's different depending on the number of properties people have. So for investors with more than 6 properties, 40% of those had at least one of them let to the LHA market. Whereas people with just one property, only 16% of them had that one property let to the LHA market. So that's quite a big difference. And that could be because LHA is seen as risky, and therefore people who've only got that one property prefer to play it safe because that's all their income tied up in that property. Or it could be because properties let to LHA tenants tend to be cheaper. So it's possible to buy more of them, and that's why people who've gone and bought more of these cheap properties have more properties. So we don't know which way around it is. But those are two possible interpretations of the data. Like you said, Rob, I was also surprised by the 13% in commercial property. And I think we need to pick those people's brains, because we've had a few people asking for an episode on commercial property, which we've been putting off because we don't know that much about it. But it's nice to know that we've got some experts who we can call on when we do.
Yeah, definitely. It's a weak spot of mine, and I know yours, Rob. So if someone wants to educate us so we can help educate everyone, then please get in touch. If you have good experience with commercial property, then drop us a line and we'd love to pick your brains. Right, once and for all, flats or houses, Rob? Flats or houses? What did everyone say?
You're not going to draw me on that. I just give the data.
Well, we've discussed this on the podcast. There's been some great debates in the Property Hub as well. We'll link to both of those in the show notes. Which is better? We're not going to go into the merits of either or. What we're going to do is tell you the data. And it appears that houses are more popular. 51% of investors only buy houses, compared to 16% who only buy flats, which leaves about a third of more broad-minded investors who are open to both. Now, I haven't got this data to hand, but I would take a punt to say that the people who are growing bigger portfolios are probably the 16% who only buy flats. The ones who only buy houses, I wouldn't be surprised if that was a smaller holding of property. It'd be interesting. Feel free to jump on the comments and correct me if I'm wrong. I know the people I work with, I know Rob, you and me both fall into the third, where we're happy to do both because there are benefits to both.
Yeah, there are. And the thread that we link to in the show notes for this is really interesting. People kind of passionately come out on each side of the debate and list the reasons why they choose just houses or just flats. And every reason that everyone gives makes perfect sense. All the benefits of each are true. But if you want the benefits of each, and why not, then you have to be prepared to take the disadvantages of each. Some people find certain disadvantages particularly painful and they're just not willing to go there. Personally, I like to have a mix, and it seems like a third of Hub members agree. Here's the big question then. Why do we invest? So a contentious debate is the flats versus houses. Another contentious debate is capital growth or rental income. Why are you investing? Now, we knew that if we gave people the choice here, almost everyone would say that they invested for a mix of capital growth and rental income, which I'm sure is absolutely true and very sensible, but where's the fun in that? We wanted to push people one way or the other. We forced people to choose whether their primary reason for investing was capital growth or rental income. 60% came out in favour of rental income rather than capital growth as their primary motivation for investing. But I think in reality, we probably were being a little unfair here, because the beauty of property is that you get both. And maybe if it was just one or the other, people wouldn't find property so compelling, but it is the fact that you can get both. But then depending on which is the most important to you, you can of course skew your strategy accordingly. In London, for example, you're probably going to be going for more of a capital growth strategy. Possibly not what I'd be doing at the moment, but that's what people have historically done. And if you're in it more for the yield, then there are places in the north which are going to be better suited to that. But for the most part, people seem to want a nice mix, and I can't really argue with that.
No, neither can I. So this is all nice, Rob, but come on. How much is everyone making? That's what we want to know. How much is everybody making? Rental income may be the primary reason for investment for the majority of people, but we're not living a high life off the back of those rents. In fact, 90% of investors make a net income being the rent received minus all your costs, of under £20,000 a year. 90%. Those with one property reported a net income of just short of £5,000. And those with 2 to 5 properties had an average net income of £9,900, which links back to why would the net income be so high, one versus multiple? As Rob mentioned before, the people who have one property, it tends to be in London. That's why the rental income would be higher, but of course the costs are higher too. The average net income figure in our survey was £17,434. But this was pulled up disproportionately by a small number of large-scale investors, some of whom had net rents nearing £100,000. Now, that is incredible. That is one big portfolio to manage. That's intimidating, I have to say. So for the majority of people, though, 90%, well, over 90%, it was under 20,000. And I think that really comes back to the point that you can make a living through rent, but the true wealth in property is created through growth. And that's why I think it was unfair for us to push people into saying whether it's rent or growth they go for, because clearly people want both.
Yeah. And then of the income that you do get, well, the next question is, well, what do you do with that money? So the average figure was about £17,000. But as we said, that pulls it up. Most people are probably making sort of more like sort of £5,000-10,000 in net income a year. What do they do with that money? Well, only 32% of investors said that they used their property income to live off. Everyone else, the other 2/3, use it to either pay down their mortgages and reduce their debt or to buy more properties. The interesting thing is, again, when you break it down by the number of properties that people own, there are some differences that emerge. So among people who have 6 or more properties, 65% of those investors live off their rents rather than paying down their debt or reinvesting them. What that suggests is that a common strategy is to reinvest the profits into the portfolio until we get to a certain level of scale that we're comfortable with, at which point you can sit back and reap the rewards. And of course, that point of comfort will be different for everyone. I think this survey is really interesting just to see what everyone else is doing, but it doesn't mean that you should go, oh, that's what everyone else is doing, I must do that as well. It's all about finding out what's going to work for you. It is interesting. I can't deny that it's interesting to see what everyone else is up to.
It's been a fascinating survey. I mean, we're very fortunate that we get to talk to investors daily. Every single day we're talking to different investors. However, we know that as readers of the Property Hub, you can interact that way. But, many of you just listen to the podcast, so you don't get to hear. So jump on the Hub to interact. But I think this is great that it allows you to just know a little bit more about who you're mixing with on the Property Hub, because you're getting a real idea of where everyone's at and what the average sort of levels are. So we've learned a lot. What's next? However many properties they have, few investors have any plans to stop. 85% plan to increase their portfolio over the next 5 years. Those with more than 6 properties are slightly more likely to be happy with what they've got, with a quarter of the investors in the group saying they plan on keeping their portfolio the same size. Only 4% said they're planning to reduce the size of their portfolio.
Yeah, so it seems like we're all happily continuing to invest, everyone at different paces, of course, but only 4% saying that they're planning to reduce the size of their portfolio. Just so, despite all the news that's coming out about interest rates and about property prices going up and about increasing regulation and all that kind of thing, it's not enough to put us off. The benefits far outweigh all of that. And only 4% of people saying that they're planning to shrink their portfolio. That's what we got. Rob, I'm going to put you on the spot now. If you had to pick out one finding that surprised you from all of this, what would it be?
You have put me on the spot, but luckily I've had a coffee. So I'm going to say the one that surprised me the most was how young people started. 20% under 25. And for those people, and I know there's people older than 25 now going, shut up, Rob. But for those people who are under 25 or who started at under 25, where they're going to be in 10, 20 years time when they're 35, 45, if they just carry on, it's going to be an incredible place. So super, super impressive. Those people who started young, they may not be under 25 anymore, but I'm sure if we spoke to the people who did start that young and find out where they're at now, they've done very well.
Yeah, exactly. I think that and a few other things that we found out as well show what an active and clued up bunch we've got in the Property Hub. Because I think if you went to the overall population of property investors, I don't know how many there are in the UK, say there's 1 million. I'm sure if you went to all of them, rather than the couple of hundred that we spoke to, the overall patterns that would come back would be totally different. Because most people are very small scale investors. They're probably not as clued up. They're not investing as much in education as we are. And that's not saying that's a bad thing. They might be happy to just sort of have one property that they spotted on the next street over and sort of have that, paying down the debt, have that as their pension. But it just goes to show from the results we've got just how active people are. And in HMOs and in commercial property, it kind of explains, I guess, why there's such a wealth of information in the hub. Every time I go in there, there's just so much amazing information being shared. And now we know why. We've got such a smart and motivated bunch of people. So thank you so much to everyone who took part in this. And thank you for your patience in waiting while we got everything analysed. I hope you've enjoyed hearing about the results. I've also put together a blog post that runs through all the results as well. And of course, we've got the infographic that we mentioned earlier, which we'd love it if you could share on your own website or Twitter, Facebook, or anywhere else. You can find all of that. You can find the blog post. You can find the infographic. You can find the links to some of the other things that we've talked about today, all in the show notes, which are at thepropertyhub.net/survey.
Perfect. So now it's another popular part of our podcast, and it's the resource of the week. And this week, Rob, you've added AdBlock Plus. So I can guess what this is, but do you want to talk us through it?
Yeah. This is a little browser extension, so for Chrome or Firefox, whichever one you use, possibly Safari as well, I don't actually know. But anyway, if you use either of those, you can install AdBlock Plus, and as you might assume, it means it will block ads. So if you've ever been on a website where there are huge flashing banner adverts distracting you, or even worse, you get some kind of pop-up window when you're trying to do something, you won't find any of that on the Property Hub. No advertising there. But on other sites, you will find these annoying things. And AdBlock Plus absolutely gets rid of all of them. It's kind of amazing because I've had it on for a while, and then for some reason it got turned off and I started noticing all these adverts everywhere, which I'd completely forgotten existed, and you just become kind of blind to it. But it does make for a nicer browsing experience if you can block them. And also it's got some other features as well. So if you want to, you can get it to block all kinds of tracking things for you as well. So you can stop Facebook from tracking you all over the internet if you care about that kind of thing. But just for blocking ads, I really like it. It's possibly a bit unfair because there are lots of free services that are funded by ads and I'm just blocking them out of my life. But I don't know. I'll leave the ethics of it up to you. But I find that it makes for a much nicer experience.
I've made my decision, Rob. I've just installed it. Right, review times. So before we get to what's coming up next week, which is a great episode, we're going to cover off a review that's come in, and thank you for people who continuously support this podcast. We do adore you. You're awesome. And this podcast comes from the original RX, and he says, or she says, they fixed it. Long-time listener and all that. The only negative point in my view is the time it took for the podcast to get to the meat of the matter. You can't do away with the introductions and a little bit about yourselves. The review section, however, you've now realised only served the people who wanted to hear their names on the podcast or yourselves. Glad that you've pushed it back to the end so I can skip, except when you read mine out, smiley face. Perfect. Well, I hope you haven't skipped this. You got to hear your review, RX. And I'm glad you like the way we've changed the format. As you probably noticed as well, we don't read as many out, so we've condensed it as well. But that was only because we just used to get so many in, which we're not complaining about. We just think it's absolutely fantastic. Do you know, Rob, we've had over 230 reviews, and the vast majority, 227, are 5 stars. So thank you so much to the people who've got behind this podcast.
Yeah, it is amazing. And we do listen to feedback. Don't be afraid to tell us what you like and what you don't like. Because much as we enjoy recording it, it's one of the best parts of our week. We don't just do it for ourselves, we do it for you. So let us know what you enjoy and what we could do better.
Absolutely.
So next week then, we've got another very interactive episode. This is listener questions, and this is my absolute favourite type of episode to do, I must say. We've been asking for you to send in your questions, and a lot of you have done. We're going to be digging into as many as we can get through next week.
I'm really looking forward to that because we build an episode around what you want to learn. And trust me, if someone's asking it, then you probably need to know it as well if you're interested in property. So make sure you join us next week. Remember, get behind Rob's new book. I know it's not property, but it is tech, and we do a resource of the week, so I'm sure you'll enjoy it. And if you want it for free, just wait a couple of weeks. It's very generous of Rob. But if you want to support him, 70 odd pence, it's not a lot really. And also, don't forget, we've got the infographic. We spent a long time putting this together and paid for an expert to get all this data out. So we hope you enjoy it. Have a look. That's all we ask. Just have a look, because then we know it was worth doing. And that's at thepropertyhub.net/survey. And then if you want to, you can share it out on your social networks or even put it on your website if you've got one. So thank you to everybody who's joined us for the big property investor survey. We've really enjoyed it. We'll catch up with you next week.
Bye-bye. Thanks for listening to The Property Podcast. Make sure you join our mailing list at thepropertypodcast.com.
And remember, we love 5-star reviews. Rob even loves them more than air miles.